Hello friends, welcome back to my channel. I'm here to talk about the Black Swan event for Hong Kong and Chinese tech stock investors because ultimately, while I'm still holding a very positive view about Hong Kong and Chinese tech stock this year, but we should note that short sellers are building short selling position in Hong Kong stocks. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. You have heard about me mentioning about the battle of systems since last year. So do you still think it is just my theory or the data stack up to it? I will leave it to you to do the thinking. But we do recall seeing George Soros calling BlackRock's China blunder back in September 2021. Here are just some of the short selling positions for some Hong Kong stocks like PSBC, Cathay Pacific in terms of the short position ratio. And you will see that for Alibaba Hong Kong shares, short selling position has been falling because of the fact that Chinese tech stocks have dropped a lot. And back in March, there's a jump in terms of the share price, and that's when the short sellers close their position. But right now, after that period, short selling positions are building back up yet again. So here is Tencent short selling position, which is being increased as well. And the average cost is around 396.4 Hong Kong dollar based on Tiger Brokers platform data. The right one here is Meituan short selling position, which is growing daily as well. Here are the other two Chinese tech stocks being Xiaomi and Kuaishou Tech. Xiaomi in terms of short selling position is still not growing that much because of the fact that it's really not recovering so well compared to Alibaba, Kuaishou Tech, Tencent and Meituan. You see even Kuaishou, the short selling positions have been built up more. And we should not forget that there is a very powerful narrative that can be used, which is the Securities Exchange Commission, SEC, that can come into play if SEC continue to add more Chinese stocks onto the delisting note and list that threatens to remove Chinese tech stocks from the US exchange. Then this could pose another downward pressure for Chinese stocks and Hong Kong stocks. Hong Kong financial center status as an international financial center is very meaningful, as this demonstrates to the world that China remains open to the world and will not close its door. You see, Hong Kong still holds on to third place in global financial center ranking. However, short sellers try to force an unpack of USD Hong Kong dollar up from the range of 7.75 to 7.85. It could possibly threaten Hong Kong international financial center status. But if Hong Kong would want to defend its USD Hong Kong peg at 7.75 to 7.85 by raising its base rate, it could lead to the short sellers being very successful in their short selling bets against Hong Kong stock. Not forgetting that if interest rates goes up, the discount rate goes up as well. That could affect the pricing of the Chinese tech stocks and Chinese stocks listed on the exchange. If you do recall, the short sellers, as shown earlier, are already sitting on profits, and not forgetting the profits they made from 2021 till March 2022 when Hang Seng Tech Index crashed over 60%. The situation right now is trickier, as China is currently having its own worries over its own economy and may not have as much resources to help Hong Kong, which may be why the short sellers are trying even more to try to force an unpack of USD Hong Kong dollar and to short sell Chinese tech stocks as well. If the USD Hong Kong peg is unpacked, it could cause an erosion of confidence in Hong Kong stocks, and this could potentially challenge Hang Seng Tech Index and Hang Seng Index severely, causing a downleg or even a few downlegs. Right now, Hang Seng Index have to hold on to 20,700 points and 20,000 points to prevent the short sellers from being successful. For Hang Seng Tech Index, it has to hold onto the 4,500 range and 4,300 range this round to prevent the short sellers from being successful. As always, this should not be construed as any investment or trading advice. Thank you.